If you want actionable value, if you want to understand what is more likely to happen, you have to chart trade. You have to do technical analysis, right? Put the pen to the paper.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, everybody, it's Kevin Wadsworth and Patrick Karim again from Northstar Badcharts.com. And what are we going to talk about this week? Well, it's the curious relationship between gold and Bitcoin. What could that mean? Pat, reveal all.
Yes. All right, guys. Of course, again, I will 100% show you charts because, look, whenever somebody asks me a question, it's always easy to answer and just throw something out there. But where's the evidence? If you're scientific, show the evidence, right? And the evidence are the objective charts. It removes the noise. It adds precision, right? It's not, we're going up, or it does, Bitcoin goes up and then gold goes down, or they're both able to go up together. But until you actually put the charts on the screen and you start doing annotations, putting vertical lines, marking timestamps, horizontal levels, what's happening, what's the true, more probable relationship, what's actually happening, then it's vague, and you won't, it will subtract the value. If you want actionable value, if you want to understand what is more likely to happen, you have to chart trade. You have to do technical analysis, right? Put the pen to the paper. So the best thing I could show you guys for this curious relationship, which I observed a while back there between gold and Bitcoin, I'll just share my screen there so I could dive into the details. So here I have in the top pane, I have the Bitcoin price. Bottom pane, I have the gold price. So you'll see here where I annotated gold's going up, 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 up. Gold peaks. It tried to break out again. It couldn't do it. That was a 2012 peak, the end of its bull era that it started back in 2001. And look at that, Bitcoin halts. But look at that. As soon as as gold really stumbles, look at that, Bitcoin. It's time to shine. It's the speculative growth bull era for speculative asset classes. Bitcoin just goes up, rockets. Now Bitcoin goes sideways, gold goes up, nothing happens. Then after that, when gold stops here, its rally, its bear market rally did here in 2016. Look at what happened right after. When gold hibernates, Bitcoin breaks out, another leg up for the Bitcoin chart. Look at that. After that, Bitcoin tops, gold goes sideways. Look at that here. This time, gold does a bear market rally, but wait, it breaks out. And guess what happens to Bitcoin as gold rockets all the way? This was the run from 2019 all the way to 2020. Bitcoin goes sideways once again as gold does its move. And guess what? As soon as gold tops, that's exactly here. When gold tops, that's when Bitcoin breaks out. It does its run while gold goes sideways. And here's again, it did it once again. Gold does its run upwards, Bitcoin goes sideways, and as soon as gold started topping, Bitcoin started breaking out again. Look, this is just, that's why I call it the curious relationship between gold and Bitcoin, because it's just something you notice, right? And you see that while they can track price-wise periods of time, the breakout moves, the moves that we try to play after big bases, it seems to be one or the other. And when gold reached its measured move from the big base breakout, right? This was a huge move it did here. If you do that measured move all the way up here to 2,700, and you've seen us talk about targets at 2,700, etc. As soon as it started losing, even on the smaller timeframes correcting, guess what happened to Bitcoin? It started breaking out of its huge range it did here sideways. So that is, when I look at stuff like that, guys, I say, okay, that's one of the relationship. And I'll show you here. Here's a little zoom, guys, in on how it did it, how it played out once again. Bitcoin, you see here, Bitcoin goes up, it stalls. It's not able to go up above a wall of resistance, right? That is previous support. Once you break down below it, it's resistance. It can't continue upwards. And guess what happened here? Bam, gold's turn to rocket, right? That was that move that I showed you on the chart above. Gold stalls. Here I have it highlighted. That's where Bitcoin started moving up, breakout, retest, and look at that, Bitcoin's move exactly at that moment. Gold stalls, gold breaks out. Guess what happened here? Bitcoin stalls pretty much at its resistance area here, area right there, goes sideways, sideways. Gold did its move, and look at that, Bitcoin broke out. Now I think it's close to 90,000, 100,000. So you could use TA with evidence when somebody asks you, well, what's the behavior between gold and Bitcoin? Do they track? What's happening with that? Well, by looking at the evidence, you're able to say objectively, well, hold on. When gold breaks out, the capital flows are going more in gold. Bitcoin has a higher chance of not going anywhere. So if you're long Bitcoin and you see gold break out, you could say, well, hold on there. Am I below resistance on the Bitcoin chart? If you want to try to front run that breakout where you should never do that for Bitcoin, and you see gold breaking out, then you should say, oh my goodness, maybe I should be looking at the gold play instead until that peters out. And then when Bitcoin's turn to break out, you could play that way. So guys, it's not something that many chart traders have seen or look at, but there are relationships like that. They're just not tracking the same capital flows at those precise moments. And that could give you an edge, though, in your trading if you're looking at those charts.
That is brilliant stuff, Pat, because, of course, it does mean that when you identify that gold reaches that point where it's stalling, rotating into Bitcoin is a high probability play, isn't it? And when Bitcoin stalls, then it's a higher probability play to do the opposite. And by doing that, you can avoid having to sit through these large sideways moves, which do actually involve some big declines there. I know you described it as a long sideways move, but when you look closely at that, of course, Bitcoin's going down 50, 60, 70% in its overall sideways move. So it saves you having to invest all the emotional capital that involves. Brilliant stuff, Pat, as always. I hope you all enjoyed that. Don't forget to like, subscribe, hit the notification bell, and let us know what you think. Bye-bye for now.